The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, joining us now here on the program as we take a look at the market action wrapping up the week of trade. We want to get some thoughts and perspective from Ted Seifert with Zaner Ag Hedge. And Ted, great to have you back on Market Talk, my friend. Happy New Year to you. We haven't talked since the calendar flipped over to 2024. Hope all is well. Thanks for joining us today.
Yeah, Happy New Year to you too, Jesse. All is well, although you can say for the mild December that we had, we are certainly paying for it here in January. Yeah, but whatever. Tis the season, I suppose, and we'll survive. This isn't news for those of us that live up north, and yeah.
Tis the
I think
season.
we've got about 14 inches of snow on the ground right now. It's all one big sheet of ice too. So
Yeah.
yay.
Well, hey, maybe at the end of the day, I've talked about this with a few folks, it could be good for soil moisture or at least help things out in the Midwest here moving into spring planting. So we'll try to look at glass half full here on the cold weather and the snow for sure. And, the markets, Ted, I'm trying to look at these markets with a glass half full mentality too. Not a whole lot for me to get excited about, though, in this grain trade. I know a lot of farmers are kind of the same way. Your perspective here, kind of 1,000-foot view of what's going on in the grain markets. I know we're at lower prices. We got all this USDA data from us. We're watching South American weather. I mean, your perspective here, first part of 2024. I mean, corn and beans feels like we're getting to some lows, but maybe not. I don't know. What do you think, Ted?
If we're looking for a bright spot, I think the brightest thing we have to say is that we've got some very oversold markets, right? Relative strength index on soybeans at 28%. Relative strength index on corn is at, just under 30 or 29.5 or whatever. So, these are oversold markets, Jesse. Now, that is not really comforting when you're looking for a bright spot. I want to say for corn, the bright spot is sort of ethanol, but then also we just saw the largest 1 month ethanol or 1 week ethanol build in ethanol stocks. So that's, maybe a wet blanket there. You can say corn exports are decent, and they are. They're significantly better than last year. But really, they're barely on pace to beat the USDA's, or well, they're really on pace or maybe slightly above pace to beat the USDA's estimate. And man, we don't need to just barely beat the USDA estimate. We need to beat it by, say, 400 million bushels. And we are not on pace for that. Could it happen? Sure. Second season Brazilian crop. There's a big problem there. Hey, we might be in business, or at least a little bit better business than we're in right now. But that's really what this relies on now, Jesse, is we need to have a weather issue, a supply side issue to do something, because the demand side is not really driving this market anymore like it was back when we had a tremendous amount of inflation and things like that. Those macroeconomic things that we had sort of giving grains and livestock and really commodities as a whole, the big headwinds, the big tailwinds that we had, those are really all faded into the background now. So we need something. And you really begs the question of, hey, look at our growing season last year. It's probably the most difficult growing season we've had since 2012. Now, it wasn't 2012, but it was bad. Really, we had one of the driest starts to the growing season we've ever seen, kind of similar to what Mato Grosso is having and down in Brazil. Yet our corn crop, we ended up with a 177 national average yield according to the USDA.
Yeah.
Wow. So it really begs the question for our growing season, how bad of a weather issue does it have to be to really hurt supply enough to get us into an area where we can get all bulled up again? I'd say South America is a different story. They have different soils down there.
Yep.
we saw in Argentina last year, drought does really affect them. So if there is a problem with that second season Brazil corn crop, which is like 75% of their overall corn production, that's their export crop, then we do have something to talk about. But short of that, we're really pulling at straws here to try to find something exciting, something that gives us hope for prices to go, dramatically higher. I mean, yes, we can have bounces here and there, but overall, we are firmly in a downtrend, and I don't know what there is to break us out of it, at least not right now. Now, what I will say is, like we talked about, we are very oversold.
Yeah.
And I do think there is reason to maybe put some weather premium into corn for that second season Brazil crop. You are seeing that happen down in Brazil as far as, their export basis. It's getting expensive for them to buy corn from farmers at the moment. So therefore, they're keeping their deferred shipment prices kind of elevated, which could be good for our export business. But it also maybe, well, like I said, maybe means that they're worried about the dryness that they have, planting.
Yeah.
We have a saying here, it's kind of an old cliche of, plant and bust and our bins will bust. They don't subscribe to that notion, Jesse. They want to plant it into moisture. So if they continue to be really, really dry, although there's some rain in the forecast, but if they are still really, really dry as they get through soybean harvest and into planting corn, they might lose some acreage. I mean, that's a possibility. And then, also it's pushing that second season corn crop back a little bit, which pushes them into their hot and dry season. So there are some risks involved with that second season corn crop. And maybe we can have a little bit of a bounce in corn because of that. Thursday's price action, reversal off of a new contract low, closing higher on the day. It wasn't a key reversal, did not get over the previous day's high, but it was a reversal higher day after a new contract low. That's somewhat positive. Problem is we didn't really follow up with that on Friday. All day on Friday, it just kind of felt like quicksand. We were just sort of sinking. So again, it's hard to find that warm and fuzzy feeling right now, Jesse. There's a couple things that may be on the radar, but I don't think there's anything to say, hey, stop selling because we're going higher. I do not have that narrative right now, and I really don't understand a lot of the analysts that do.
Ted, talk to me about demand. I think that's one area that you and I could really get into a discussion here, and specifically China. Where's China? I think a lot of folks are asking that question, and I think you answered some of that already. They're going to South America. They're going to Brazil. They're filling their needs with Brazilian corn and soybeans right now. Yes, we got that flash sale of soybeans to China on Friday morning. We haven't had many flash sales really in the last 2 months to China or unknown. And I know there's some questions about China's economy, but still, by and large, China has shifted a lot of their buying to South America, and that is not good for the U.S. farmer, is it?
No, really not good, Jesse. So for corn, China is buying corn. They're up on the marketing year. They've increased their corn buying by like 32%. And by the way, I mean, just a little side note, go back to the Chinese crop, and they said it was, fantastic crop. And we're sitting here looking at radar and stuff like that saying, I don't know about that. I think this is sort of proving those statements wrong. So that's just China doing China things. Either way, their corn buying's up pretty dramatically. One, I do think they are using more corn in their feed rations, and I think that is sort of evident there with those big corn purchases that they're buying. But to your point, their new corn friend in Brazil, wow, that's really where the vast majority of that extra corn is coming from. That and the Ukraine, actually. It's not really coming from us, and that's a bit of a disappointment. And then, for soybeans is a different story because China's done business with Brazil on soybeans for a long time. That's not a new thing. But where's the sense of urgency, right? If there is this big problem with this Brazilian soybean crop, China, again, has boots on the ground in Brazil. They know what's going on with their crop better than you or I.
Yep.
And if they really, really were worried that Brazilian crop was absolutely toast, they would be buying a lot more aggressively from us. Now, it was nice to see that flash sale, right? I mean, that was, we haven't seen anything like that for a while, and it was a halfway decent sized one. If that starts happening on a more regular basis, maybe there is that sense of urgency starting to build. I don't know. I think for right now, you got to look at that as sort of a one-off. This is the time of year where they have to make purchases like that. So it's not outside of normal, and I don't think we can get excited about that just yet. And it's reflected in how the market's traded, but if there was a sense of urgency coming from China, different story. The problem is the fact that there isn't says one of two things. Either China feels perfectly fine about that Brazilian crop, Brazilian, Argentinian, South American crop as a whole, Paraguay, Uruguay. I mean, you got to look at that all as a combined thing. Or they really don't have the demand. And like you said, there's concerns about the Chinese economy. We've seen their pork prices under a lot of pressure, meaning pork demand is suffering a little bit. And if people aren't buying pork, what does that say about their overall economy? For a very long time, Jesse, I've said, don't listen to what China says about how their economy is doing, GDP, things like that. Look at their pork demand. That is the best reflection of, I think, the health of the Chinese economy that we have sitting over here, right? Either way, their pork demand, I think, seems fairly soft right now, and that's a concern. Their crush margins aren't good. So the combination of I think, poor demand in China, and I think sense of they feel like that crop isn't maybe as bad as what some of the recent estimates that we've heard. Whatever it is, they're not buying aggressively, and if they're not buying aggressively, that whole narrative just falls on deaf ears when it comes to the market. Because again, what we have is a USDA balance sheet that just is growing. We've got an increasing ending stocks number. The world ending stocks number went higher despite a cut in Brazil's production. So these are not things that make for a sharp rally, Jesse. Again, the only thing that, in my mind, that would really change that is if China does start coming in here and making some splashy sales, and we start getting some weekly export sales numbers that are in the 1.5 to 2.5 million metric ton range, then I think we have something to talk about.
So, Ted, for farmers who are looking at their marketing plan pretty hard here, early 2024, maybe they didn't make as many sales as they wanted to or should have when prices were a bit higher. I have to think, I've been talking to a lot of folks about this. You got to be creative here and make sure you have a good, sound marketing plan and try to take advantage of all the tools in the toolbox here at this juncture. Would you agree with that?
Absolutely. We've talked about it. There's a possibility of a bounce sort of led by corn, and I think soybeans would want to follow because this is the time of year where we talk about acreage. And I don't think soybeans can afford to lose any acreage. If anything, they should try to gain. So there is that possibility of a bounce, but don't let that stop you from making sales. I think the best thing you can do right now is just have a schedule to sell a certain amount every week, kind of regardless of the price at this point. And then if you do get a bounce, reserve some bigger chunks to be sold at that time. You have to continue with your marketing. You cannot go head in the sand, ostrich type, deal. If you do that, the way that this is unfolding, the way the charts look, the way the trends have been on the USDA balance sheets, the global carryover, the corn carryover went up by 10 million metric tons, Jesse. These are not markets to sleep on. I know it's kind of depressing to look at these prices compared to where we were. Historically speaking, we are still at some decent prices. I mean, I know that we're $2 off the highs in corn, right? And I get that, but you still have to be making sales because it could get a lot worse or doing something, right? I mean, and I'm not talking basis contracts necessarily, but I'm saying, some put protection, things like that. You really have to protect the downside because the risk that we have is really very great. Again, I think we're banking on a lot of what ifs and long shot scenarios to get these markets to go sharply higher. The bounces might be few and far between from here. So you have to make those sales kind of regardless of whether you love the price or not right now.
Ted, let's flip over to livestock real quick. Some thoughts there. Protein sector. I know cattle specifically, we're waiting on the cattle on feed numbers. Market's kind of been positioning ahead of those, it looked like, here to end the week. But overall for you, notes for us in this livestock trade as we're kind of getting into the back half of January here. What are you watching right now?
Yeah, I guess, we talk about, how it's hard to find a bright spot in the grains complex. But for the cattle complex, I mean, that kind of is the bright spot, is that you've got corn prices coming down pretty significantly, and that's pretty beneficial for feeder cattle. Feeder cattle have had a really nice bounce off of lows. You have a V bottom right now, which is not something you technically really want to see in markets, but I will say with an asterisk, the livestock markets are some of the few markets that's okay for. So I'm all right with that. And now you've got prices back to at or actually just above where we were right at Thanksgiving. I mean, things really kind of accelerated to the downside after Thanksgiving, and we've taken a lot of those losses back, which is great. Now we're still well off the highs, but I do think we still have some upside potential, partially because corn has come off, but also this is a seasonal tendency to go higher, right? And then also from a weather perspective, Jesse, when you get these cold polar blasts and a whole lot of snow and things like that, it's kind of tough to figure what that means for the market in the short term. But I think it's better or easier to look at what's going to happen in the long term. The reason why it's tough in the short term is you don't know what packers are going to do. We've seen shutdowns because of cold temperatures or too much snow and things like that. Those are temporary, but it really does put pressure on the cash market, which in turn puts pressure on your upfront futures market. But longer term, man, this is not easy weather for cattle, right? And so weights are going to be a problem, or not a problem, but weights are going to suffer for that. You hope that there's not any winter kill happening, but that's certainly a possibility. So from a supply side of things, I think that tightens a little bit. I don't know if you see that on the cattle on feed report this time around, but maybe the next. So I think that's sort of a positive thing longer term, and what is already still a fairly tight supply side situation. Maybe it's not as tight as what we had in our mind back in July and August, and a lot of that's because we had replacement cattle coming up through Mexico more than what we were expecting. But either way, I think there's still sort of a friendly, bullish fundamental story there in the cattle complex, and I think we have higher prices to come. The charts look good to me, despite that V bottom. And as long as we don't have a major economic sort of crisis, which we've sort of avoided so far, I think demand stays really good. Domestic demand, I think, stays really good. In fact, I think you had a lot of people go out and stock up in front of this last major blast of cold, and I think they're going to be doing it here at the tail end of this week into next week too. So I think the winter weather ultimately is a bit of a friendly thing for cattle prices. And again, the seasonal trend higher, overall health of the economy or seeming health of the stock markets, or strength of stock markets and things like that. I think there's more upside there. As far as hogs are concerned, we really had that flush out, right into January 1st, because that's when the California thing was going to take place. And then it did. Mm-hmm. And the world didn't end. And now we've had a pretty healthy bounce off those lows. To me, it looks like the hog complex is putting in a longer term bottom, or at least trying to. I think we do have potential to go a bit higher, but I don't know about sharply higher. Weights are kind of a problem, although they have been coming off as they do seasonally. They're still above where they were this time last year. And my thing about pork demand is that as long as people are comfortable paying for beef, specifically, higher price cuts of beef, there's not a ton of upside potential in pork demand. I think pork demand really benefits when we have these scares and we're worried about our pocketbooks and things like that. I mean, the pork demand is going to be good. I think is good. It's just, I don't know. You don't have that consumer flocking from beef into pork. Mm-hmm. At least I don't see that at the moment,
Ted, good thoughts as we wrap it up. Anything final for us here today on the show?
No, I'm going to go back to what we talked about earlier. I don't think now is a good time to just sleep on marketing and just say, hey, I'm going to wait for higher prices. They're going to come. The last few years I've been able to do that. This might not be that year. Again, there's a lot of reasons why this might not be similar to what we've had in the previous few years. We really need I really think the only thing that we've got potentially would be a massive problem with that second season corn crop. in Brazil. But short of that, I don't really have a good, warm and fuzzy narrative for you, Jesse. So I do think you really have to be vigilant and continue to be marketing despite the fact that we aren't looking at the prices that we had been enjoying for the last couple of years.
Ted, if folks want to reach out to you with their questions and talk with you at Zaner Ag Hedge, how can they reach you?
Yeah, after all that, I'm not sure anybody wants to. but sure, you can reach me directly at 312-277-0113. You can also find us on the web at www.zaner.com. You can read a bit about us. You can also sign up for, I'm doing an afternoon 5 to 7 minute, just kind of recap of the markets and kind of preparing for the next day. And then also you can find me on Twitter or X. I'm at the Ted Spread.
Always a great conversation. Appreciate the time. Ted Seifert, Zaner Ag Hedge. Thanks for joining us, buddy. Have a great weekend. We'll talk to you again soon.
Thanks for having me, Jesse. You have a great weekend too. Talk to you later, man.
Thank you very much. Ted Seifert there with us on Market Talk. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
If you miss an episode of Market Talk, you can listen back to the show anytime. Just search for Market Talk on your podcast platform of choice, and you can hear past episodes of the program on demand.